Hey everyone, Coach Investor back to another video for today. Now before I start, just a quick thank you to the members of this channel and the newest one, Part. Thank you very much for the free coffee basically. Now let's talk about Twilio. Last time I touched on this company was right after the stock crashed 35% after they reported earnings. There were some couple of reasons why, specific reasons why such a big crash. If you want to watch that video, it's going to be in the top right corner. In today's video, let's focus on the company right now. What the market is expecting for 2023. So we have a couple of analyst notes, some bad news as well. We're going to look at obviously a couple of key numbers that you should be looking out for when the upcoming earnings report comes out, which I believe is beginning of March or so. So without further ado, let's get started. So this is the company today, market cap of just over $10 billion, revenue in the last 12 months, $3.64 billion. Of course, if we look at free cash flow, it's not a pretty picture at all, has decreased quite rapidly in the last couple of quarters. Return on equity keeps being negative. Gross profit margin has come down as well in the last couple of years actually. Now from a valuation standpoint, EV to sales in the next 12 months we're at 1.8 times. You usually want to see between 1 and 2. So okay, we're between 1 and 2. Now, with regards to 2023, the company does still expect to be non-GAAP profitable in 2023. It still has plenty of cash, close to $3 billion in cash. They did talk about buybacks not being off the table if the stock price obviously continues to be low and the company continues to generate or has enough cash to survive for a long time if they're not profitable yet. So all of those things you still have to take into consideration. Buybacks, to be honest, I don't think they'll announce pretty soon. Maybe they'll use it to acquire another company, a small competitor, etc. But let's be honest, right now, buybacks, the stock is up around 35% since the lows after they reported earnings. Of course, the stock is still down 70% since last year. That doesn't mean that it's undervalued or overvalued or whatever. It just means that, yeah, the stock has crashed a lot. They still have enough cash. They're not really burning that much cash. So let's see what happens. Now let's start with a price target lowering at Oppenheimer from $110 to $75, but it keeps an outperform rating on the shares. The analyst is also slightly reducing his 2022 year-end and 2023 estimates across his coverage universe. Demand pattern have slowly deteriorated through 2022 as anticipated recessions across the globe and FX moves have impacted international business activity. Similarly, rising interest rates have slowed business activity, extended sales cycle, and hurt SMB demand in the United States. Looking to 2023, the analysts expect a more muted Q4 2022 budget flush effect and a potentially slow start to enterprise spending in Q1 2023 as IT budgets are finalized and enterprises wait for visibility into business activity before resuming budgeted spending activities, right? He still sees quite a nice upside from the price the shares are today. Up next, we have a price target lowering as well from Piper Sandler from $79 to $69, keeps an overrate rating on the shares. The analyst adjusted estimates and valuations across the cloud automation software sector ahead of earnings. So being cautious here. And then probably the big, let's say, report, not so big, but gave us more information. From an analyst, Adbird, who still has a neutral rating on Twilio, noted that the survey, which included more than 150 responses, showed longer sales cycle for contact center and unified communications. Both growth for the first one was solid, while for the second one, the unified communication one, came in below expectations. And that's why last week the stock slipped more than 3%. Of course, right now it's up close to 10%. Now, I did say here that among those players in the unified communication space, RingCentral has the largest presence, but Zoom and Microsoft continue to gain share. Of course, with Microsoft reporting earnings after hours, good information to have. Now, with regards to what happened in Q3 and what you could expect in Q4, what they're expecting. So just because the stock crashed 35% does not mean that the company suddenly stopped growing. No, third quarter revenue grew 33%, organic growth 32%. Of course, revenue dollar-based net expansion was 122. We saw this sequential decline. Let's see if this number drops under 120%. It's not going to be a great picture. Now, as for Q4 guidance, they expect growth organically and for total revenue to be between 18 and 19%, again continuing that decline of the year-over-year growth. Now, of course, because of the macroeconomic environment, this was to be expected. Probably a lot of analysts, investors will be looking at what their expectations are for 2023. And of course, from a non-GAAP basis, loss from operation, loss per share is still negative. Like I said, 2023, they do expect to be profitable. Maybe just one quarter, maybe at the end of the year, we don't know. The market expects loss per share on a non-GAAP basis to be negative 8 cents. So let's see what happens. Also, revenue consensus is around $1 billion. Let's see if they can beat that number. Now, when it comes to the graph, of course, this huge red candle right here was after they reported earnings. So that huge drop. Next day, big green candle that didn't last long, so went back down to around $44 or so. But then, of course, in recent weeks, market looked a bit better. So we made our way up over that 20-day moving average, over that 50-day moving average. And right now, well, basically we're a bit in no man's land. So if we look where the 200-day moving average is, well, still at $92. So pretty high, pretty long way to go as well. Again, seeing those recovery patterns here, you don't really want to see a V-shaped recovery because that's not really that sustainable. Although if you look at the RSI, it's still not that dangerous. It's just under 42. MACD is still bullish, but as with many growth stocks, still under the zero here. Now with earnings coming up in, what do they say here, around February 15 apparently, so not that long, we could see maybe more movement just after that date. Now, of course, do share your thoughts down in the comments below. What do you think about Twilio? Great business to own, a pass for you. Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. Subscribe if you have not, and I'll see you all in the next one. Bye-bye.